The markets seem to be levitating for now, assisted by the central banks, and with additional aid by the torrent of corporate buybacks. Is it all an illusion? Let's take a look at a pattern that has been developing that is similar to a pattern we saw during the summer of 2018. It's called a rising wedge, and we are approaching the moment of truth. As we saw last summer, these patterns can keep going until they break. But even last summer's break still managed to squeeze out new highs before falling apart. On the flip side, the energy released can be awesome, as we all saw that 20% market drop. If you're not familiar with the concept of a rising wedge pattern, here is how Investopedia shows this pattern. The wedge broke last year as the Fed transitioned after 10 years of accommodative to non-accommodative with a view to keep raising rates and a balance sheet roll-off on autopilot. This new wedge has risen from the depths of the Fed's capitulation and going back to accommodative conditions. This new wedge shown in this chart from northmantrader.com, along with the wedge from last year, came from the massive oversold conditions in December and is now steeper and more narrow. It will most likely break at some point. So, will we have the same reaction as last year? Well, who knows? After all, central bankers are back in accommodative mode and remain in control for now. But clearly, the NDX has some open gaps to fill and some retesting to do. But until this wedge breaks, it can also go higher to even new highs. But note, once again, a negative divergence in the relative strength index as shown in the upper portions of the chart are occurring on new highs. Remember, nothing matters until it does. And for now, nothing matters. On Friday's market update, we'll look at our charts once again to see how things are shaping up because we are approaching the moment of truth. And my viewers know it's time to pay attention. So for today, that's ChewDog Charts. Thank you.